So, last Friday, September 5th, something interesting happened. Broadcom's stock shot up, but at the same time NVIDIA and AMD both took a hit. Now, if you just read the headlines, you probably saw the news about a weak jobs report and maybe thought it was just another volatile day in the market. But the real story, the one that actually matters for your portfolio, is a little more hidden. It's about a fundamental shift in the AI chip space, and it's something the big Wall Street firms are watching very, very closely. Look, if you're short on time, here's the key takeaway. The news about Broadcom securing a massive $10 billion order from a new AI customer is not just a fleeting sentiment pop. It is a tangible multi-year revenue driver that signals the biggest players in AI are getting serious about building their own custom chips. This creates a real near-term headwind for both NVIDIA and AMD that you absolutely need to be aware of. For those of you who are new to the channel, my name is DataCat. I spent a good chunk of my career as an analyst inside a Fortune 50 company. My job was basically to live inside messy, dirty data and find the signal in the noise. Eventually, I decided to trade the corporate grind for this. A keyboard and a laser pointer. It's a bit of a change, but the core job is the same, digging through the data to figure out what's actually going on. I'm not here to brag or sell you anything, just to share what I find both fundamentally and technically. If that sounds useful, maybe stick around. Oh, and perhaps consider pressing the like and subscribe button over there. It would be a huge help for an unemployed cat sitting in front of his laptop. Alright, enough with that. Let's lay out the facts of what happened. On Friday, Broadcom, or AVGO, announced it had a $10 billion order for a custom AI chip from a new fourth major customer. Now, analysts are pretty much all in agreement that this customer is OpenAI. This is a big deal. We're talking about shipments that are slated to begin in 2026 for a chip that OpenAI apparently co-designed. The moment that news hit, you saw the reaction. NVIDIA and AMD, the two darlings of the GPU world, both traded lower, with AMD got hit harder than NVIDIA. This was amplified by a pretty disappointing US non-farm payrolls report that came in way below expectations. The market was looking for 75,000 jobs, and the actual number was a paltry 22,000. So, the central question we have to answer is this. Was the big move in Broadcom just market sentiment, a flash in the pan driven by a headline and some macro noise, or is this a fundamental game-changing event? Let's start with Broadcom. In the short term, yes, sentiment was a huge factor. The headline was a surprise, and it caused a rotation of capital. But when you look at the medium term, this is deeply fundamental. First, this gives Broadcom incredible visibility. A disclosed $10 billion order isn't just talk, it's real predictable revenue. This adds another giant to their already impressive list of custom chip clients, which includes Google, Meta, and ByteDance. Second, and this is the most important point, it confirms a major secular shift that's been happening. The biggest tech companies, the hyperscalers, are moving toward vertical integration. They want to design and build their own specialized AI silicon. Think of Google's TPU, Amazon's Trainium, or Microsoft's Maya. They're realizing that for their specific workloads, a custom-built chip can be more efficient than an off-the-shelf GPU. It's like, you could buy that fancy, expensive cat tree, but sometimes a perfectly sized cardboard box just does the job better. OpenAI moving down this path with Broadcom proves this trend is accelerating. Of course, it's not without risk. The timeline is a big one. Shipments don't even start until 2026. Between now and then, a lot has to go right. You have to de-risk the manufacturing process, the yields, the advanced packaging, and the software integration. It's a complex dance. But if they pull it off, the market is already pricing in a significant boost to Broadcom's AI revenue. Now, let's talk about the ripple effect on the companies you probably care about most, NVIDIA and AMD. Why did they trade down? For NVIDIA, the near-term impact is pretty limited. Let's be clear, NVIDIA has a powerful moat. Their CUDA software stack is the industry standard, their backlog is huge, and they offer a full-stack platform that developers are locked into. Hyperscalers are still going to depend heavily on NVIDIA for the foreseeable future. However, in the medium term, this does signal incremental headwinds. As its largest buyers like OpenAI develop custom ASICs for specific jobs, it will start to eat into NVIDIA's potential market share for those workloads. Now, I would like to emphasize it won't be a cliff, but you can expect some pressure on their growth mix and margins over time. On the other hand, the reaction for AMD was, you'll notice, more negative. This is because the news directly hurts the narrative that AMD is the go-to second source for GPUs. If a massive player like OpenAI decides to build a custom chip instead of just buying from NVIDIA's main competitor, it suggests that AMD's path to gaining significant share in these flagship accounts just got narrower. Their Broadcom software ecosystem is still maturing, and this development puts more pressure on them to prove its value and secure diverse wins. So, when you put it all together, what are the key takeaways? For Broadcom, this is not just hype. The OpenAI deal adds a genuine multi-year revenue stream and validates their entire custom AI silicon strategy. The value is weighted toward 2026 and beyond, but the path is now much clearer. For NVIDIA, the fundamentals are intact for now, but this is a clear signal that the competitive landscape is evolving. The biggest threat isn't another GPU maker, it's their own customers. And for AMD, this headline complicates their second source narrative. Their success will depend on continued progress with their software and their ability to win over customers who aren't going the custom silicon route. Now, let's pull up the chart for Broadcom. What we're going to do now is blend the fundamental story we just discussed with what the price action, the technicals, are actually telling us. The surge in Broadcom stock on September 5th is a textbook example of a fundamental news catalyst completely reshaping the technical landscape. That OpenAI partnership was the ignition for an explosive move. First, let's look at the immediate reaction on the 5-minute chart. The news triggered an immediate reevaluation of Broadcom's future, causing a massive pre-market bid. The technical signature of this was a huge 16.2% gap up at the open. When you see a gap like that, on volume that was over 3.6 times the 20-day average, you know there is massive institutional participation. This isn't just retail traders. However, the stock closed significantly off its high of $356. This created a gap and fade pattern. It tells us that while the news was overwhelmingly positive, a lot of early investors took profits into that initial strength. That's a very common thing to see after such a large sudden move. For the rest of the day, the price just settled into a sideways consolidation, building a wedge and rectangle pattern as it coiled around the volume-weighted average price, or VWAP. Now if we zoom out to the daily chart, the picture gets even clearer. This move was technically a major breakout, but it also shows signs of short-term exhaustion. The stock was already in a healthy long-term uptrend, trading above its key moving averages with a golden cross active for 77 days. This news provided the fuel to break out to a new 52-week high. But this explosive move pushed the daily RSI to overbought zone, which could mean the stock is due for a pause or a pullback. The price is now significantly extended, over 10% above its 20-day EMA, which often has a tendency to snap back toward the mean. But the really interesting part is the context, looking at the 3-month analysis. This catalyst arrived at a pivotal moment. Before the announcement, Broadcom was in a 63-day sideways primary trend. It was going nowhere. More importantly, momentum was showing signs of decelerating with a bearish divergence. This suggests the stock was losing steam and could have been at risk of rolling over. It looked like it was getting ready for a long nap in a sunbeam. However, the volume flow analysis during this quiet period showed quiet accumulation and positive institutional flow. This indicates that smart money may have been building positions. You know, like a cat that looks perfectly calm, but you can see its tail twitching, scheming, and ready for the pounce. The OpenAI news was the pounce, and it completely invalidated those weakening momentum signals and resolved the consolidation powerfully to the upside. So, let's synthesize this. The narrative is a fundamentally strong company in a long-term uptrend but experiencing short-term momentum fatigue, received a game-changing piece of news. This attracted massive institutional volume, causing a breakout to new highs. The market is now in a digestion phase. the technicals are flashing short-term overbought signals, suggesting a pullback or more sideways action is more likely than another immediate vertical move. So what are the key levels to watch moving forward? Immediate resistance is the day's high, around $356. That's the clear level the bulls need to overcome to signal a new leg up. Before that, the $341 level stands as a minor hurdle. For support, the price is currently sitting on a key zone between $331 and $334. This area represents the intraday lows and the VWAP. Holding this level would be constructive. A failure to hold the $331 level would open the door to filling the gap. A key level to watch on a deeper pullback would be the structural support around $307. A test of this level would still be considered bullish in the long run if it holds, which makes it the most tempting entry zone to watch. The fundamentals have provided the why for the move, while the technicals provide a roadmap for the how and what's next. The long-term outlook has been fundamentally improved, but you should be cautious of the short-term overbought conditions and watch these key support levels. If you find this blend of fundamental and technical analysis valuable, and you want to see more deep dives that cut through the noise, a like and subscribe would be really appreciated. It helps me know I'm on the right track. Alright, that's all for today. Before the market opens, DataCat out, stay safe and stay sharp out there.